Remember when gas was less than $1 a liter and you didn't need to take out a loan to buy groceries? That wasn't that long ago. Everything has changed, including how we all need to budget. Stay tuned. Maureen and I will discuss it starting in 8 seconds.
This is Debt Free in 30. Here's your host, Doug Hoyes.
As listeners to this podcast know, I am not a fan of budgeting. I think for most people, it's too hard, you won't stick with it, you get discouraged, and I think that's worse than not budgeting at all. It's like failing on a diet and then going on a big cookie binge. Would have been better to just not do the diet in the first place. It's not good. I even wrote a chapter in my book about it. You'll want to go to Amazon and pick up Straight Talk on Your Money. I prefer that instead of budgeting, you set your bills on auto payments. Same with savings. You just set it and forget it. However, I do understand that you have to know where your money is going. Otherwise, how can you make changes? So today, my guest will attempt to convince me that it is possible to make a budget that actually works. And it is certainly challenging in these times. Maureen Parent is a licensed insolvency trustee. Maureen, you are in our Canada office today. Is that correct?
That is correct. Yep. Canada in the Ottawa area. Yep.
So Ottawa region, Maureen Parent, you've been on the show before, so welcome back. Today we are going to talk about the 50-30-20 budget. So let's start by you telling us what in the world is the 50-30-20 budget.
Well, it's a way to easily allocate where your money's going. So you're basically taking 50% for needs such as rent, mortgage, car, groceries, utilities, basic clothing, minimum debt payments, those kinds of things. Then 30% goes to wants such as eating out, above basic clothing, extra grooming, streaming services, that kind of thing. Savings is the last 20%. Well, I should say the 20% is savings, but also more than your minimum debt payments if you're trying to pay down debt. So that's the 50-30-20.
So I'm going to poke all sorts of holes in this because I'm, of course, not a budgeting guy anyways. But before I do that, who is this designed for? Who was this 50-30-20 budget concept created to help?
Well, it's created to help really the average income earner, because if you're a low or income earner or it's a temporary income problem, you're focused on your needs, and that's all the money that you have for. And then high income earners, they're going to have a lot more money towards wants and savings. So the average income earner can benefit from a percentage structure.
And so the advantage of this is what? What's good about this approach?
It's easy to implement. Like you just parse it out and it's percentage. So you're not picking a number, you're picking a percentage of the income that you're bringing in. So it's a good way to start.
Okay, so that's the setup to this. Now let me just start picking holes in this. The biggest problem I see, well, my big problem with budgeting, like I said in the intro, is it's hard to do. So, okay, I'm going to allocate 50% of this, 30, okay, I've got to be doing math. And what happens if I really need to spend 55% on that and only 25% on that? So now I've kind of messed it up. And so I got a problem with that. My other problem, though, is I don't think the math even works. So we know from our Joe Detter study that we publish every year, and people can, I'll put a link in the show notes, but you can go to joedetter.ca and see it. Last year, so in 2021, our average client had take-home pay of about $2,600 a month. So I'm going to let you criticize this by telling me the numbers. So go through $2,600 and, how much is 50%, how much is 30%, how much is 20%. In fact, I can tell you what 50% of $2,600 is. It's $1,300. I did that in my head, okay, because I'm pretty good at the math thing here.
Excellent.
50% is for needs. So $1,300 for needs, that's not possible.
No, especially right now. It isn't possible right now. If you're looking at rent for one bedroom in Ottawa, it's $1,618 on average based on rentals.ca, and Toronto's like 2013. So automatically, if your average income is $2,700, it's not going to work. at all. So that's where you don't necessarily throw the baby out with the bathwater and say, 50, 30, 20 doesn't work. You adjust it and say, okay, maybe I need to be putting 80% towards needs right now, and then adjust the different percentages. So it still can work, but you do have to adjust the numbers. I
got a question there. Did people actually used to throw the baby out with the bathwater? Like, was that actually a thing? Because when I had little kids, we gave them a bath in a bathtub, and the drain hole was pretty small. I don't see how you could actually be throwing the baby out.
I know. But it just means, like, don't overreact.
Okay, so what you're saying then is, what we're dealing with here are general concepts. Roughly half of your budget goes towards, things like, needs. So you define needs as, rent and food. I guess those would be like the two big ones, utilities. Yep. So stuff I have to spend on. So, okay, maybe it can't be 50% given what your income is. Maybe it has to be 60% or some higher number, but you're still kind of shooting for a certain level is what you're talking about.
Right. Like if you're looking at the numbers for a single person, just basic rent, utilities, cell phone, those kinds of things. I mean, you're looking at 85% of your income. If it's $2,700 net a month, that's going towards needs. So automatically 50, 30, 20 isn't going to be your go-to. As a person, if you're a family of 3 with a 2-person income average, then you're looking at about 73% of your income going towards needs if you're including a car with that. So you can't do the 50, 30, 20, but I still think you can still do a percentage. It's still a good place to start. That makes sense.
Yeah, and I guess if you're spending 100% of your income on needs, which a lot of people are, then okay, not a whole lot I can do in terms of savings and everything else, but in that case, I've got to focus on, what can I do to increase my income? What can I do to increase my expenses? Because I'm kind of out of whack. So I want to talk more about that, but let's go to the last point, which was savings. So like 20% for savings seems, wonderful, but ridiculously unrealistic for the vast majority of people. I mean, for 100 years, all the financial gurus have said, save 10%. That's kind of that's biblical, right? I mean, tithing, that means 10%. I realize tithing is not the same as savings, but 10% seems to be an achievable goal. 20% seems like a really high number. Is that realistic for a typical person?
Well, and remember the 20% was including savings and debt repayment, right? So a lot of people carry debt. So you're not really saving 20%. You're using 20% for debt repayment and some savings.
Yeah, and I guess we could do a whole show on that. I'm of the view that you should pay off your debt, then worry about savings, because carrying a credit card balance with a 20% interest rate and putting $20 a month into your TFSA earning 0% makes no sense to me. But I do understand that there are people who believe you need to get into the savings habit, and the way to do that is to actually be saving money, even if it's a small amount, just to establish the habit. So okay, I see what you're saying. The 20% would be paying down debt or savings and or both, depending on what's realistic. But I guess you are, in essence, agreeing with me then that the specific numbers don't make sense for the average person. So you gave the example, not now. Yeah, I gave the example of a single person, $2,600 a month. Doesn't make sense because rent in Ottawa is, you said $1,600 a month. In Toronto, a couple of $1,000 a month is not uncommon. A family of 3, the numbers you were saying would be that, that based on the typical, numbers out there, they need more like 73% of their budget being allocated to needs, which is a lot higher than 50%. And obviously, if you're allocating 73% to needs, well, I guess that means I don't have the 20% for savings and debt repayments. So it doesn't make sense. So, okay, I get the big picture, but I also get what you're saying. This is a directional piece of advice, meaning here are some kind of targets to shoot for, even if you can't get to the exact numbers. So let's move into the practical advice section here, because I think that's more important than arguing over the numbers. So you meet with a bunch of people every day. You meet with people who are in debt and are coming in to you to file a consumer proposal or bankruptcy. But then you also meet with a bunch of people once the process is started, because as listeners to this show will know, everyone who files a bankruptcy or a consumer proposal is going to have 2 budgeting sessions, what we call credit counseling sessions, where we, teach them some tools to get a fresh start. So when you are meeting with someone in that environment, going through the numbers, giving them advice for the future, what are some practical tips that you are giving them to help them, get back on track, either using the 50, 30, 20 or wherever else you would like to begin?
Right. There are and to be honest, like when you're in a budgeting session, it's going to be driven on who's in front of you, because everyone is different. And not only different budgeting styles will help different people, but also as an individual, the way you budget will evolve as well. So, it's a good recognition that some form of budgeting is important to you as a person, but it needs to reflect something that you're actually going to do and not something that you're going to feel obligated or guilty because you're not doing it. So,
yeah, and that's, to me, is a really key point there. It has to be something you're actually going to do.
Yeah.
And this, again, as I keep hammering the same point, if you're not going to do it, then what's the point? So
exactly.
If you want to lose weight, you can count calories and do all this fancy stuff, or you can get rid of all the junk food in your house.
Right.
And that is probably a more achievable way to do it. When it comes to budgeting, okay, there are some people who really like to keep track of everything. And obviously there's apps on your phone and a whole bunch of technology you can use to do it. Whereas for other people, it's much simpler to just pre-program all your bills. Your hydro bill comes out, whatever, and do it that way. So I totally agree. Everything we're saying today these are ideas, but you have to decide what's going to work for you and what you will actually implement. Now, I think there's also a difference between short-term and long-term. So I have no objection to saying to someone, okay, for the next month, I want you to count every calorie, because that way you'll get a sense of how much you're actually eating. I think for budgeting, same thing. For a month, for 2 months, for some limited period of time, keep track of every dollar you spend. And again, if you're using your debit card for everything, it's all on your bank statement. It's all on the computer.
Exactly.
So go ahead.
Another thing to do as well is if you look at all of your musts in your budget. I must pay rent. I'm going to be buying food. Like all of your absolute musts, utilities, those kinds of things. If you take your income and subtract those musts and you're in the negative, you have an income problem. So you have to find a way to increase your income, or maybe look at moving or something, but that's an income problem. If you take your musts, less like your income, less your must, and you have still money left over, then you have more of a spending problem. So it's good to identify where you need to start. I mean, either there's only really 3 solutions. You're increasing your income, decreasing your expenses, or you're doing both. So you want to start off knowing what you need to focus on first.
Yeah, and increasing your income in the short term is for most people pretty difficult. Yes. Unless you pick up a second job or you start driving for Uber or Uber Eats or something on the weekend or whatever. And your musts, things like rent, cannot be easily reduced quickly either.
Right.
But you're right. This is math. The ins and the outs have to balance, or else you've got a problem. So maybe it means I got to move to a cheaper place. I got to bring in a roommate or whatever. So I agree. Right. What you're talking about is setting the foundation first. What do the big picture numbers look like? Then what happens next?
Well, then, as you were saying, you're tracking your spending, either going forward a couple of months and tracking or looking back over your bank. Most people debit now, and you can go in your bank and see where you've spent. And then you're giving yourself power. A budget is all about empowering you to make conscious choices. What is most important? If you go through your list, do I value it? Can I afford it? And you go through everything that way. And it's always good to annualize your expenses. Take your Rogers and multiply, or table, I should say, multiply it by 12. If it's $2,400 and you're a hiker and you love to be outside, well, then you're spending too much money. How can you adjust it? So when you annualize an expense, it has a bigger mental impact, because a lot of people will say, oh, $200 is no problem. $2,400 a year is a big problem. Right. And then, so doing that value assessment, I think, is the next step, because research shows that people who put their money to what they value are happier, even though they don't have everything society says we should have.
Yeah, and you're right. Giving yourself power. I like that, because that's really the name of the game here. You want to be the boss. You want to be in charge. So if in the spring and the summer and the fall, I spend a lot more time outside because it's light out, I can go for a walk. Well, do I really need to keep my Netflix subscription all summer long? Do I need to have 90,000 channels on cable that I'm not going to watch? So it's a perfect opportunity to scale that stuff back, reduce it, whatever. And you're right. Looking at it on an annual basis makes the number a lot bigger. So that's looking at the expense side, going through every item and saying, okay, can I cut this? Can I cut that? And you're not really targeting, I need to get to 30% of my budget. You're really targeting, I want the number to be as low as possible so I can allocate the money elsewhere. It's really as simple as that, right?
Right.
Now, you mentioned debt, and since this is called Debt Free in 30, let's talk about that for a minute. I'm a big believer in, as are you, in reducing debt as much as possible. How does that factor into the whole budgeting equation?
Right. Most of the people we deal with just have that one structured payment that can fit their budget. So they have a lot of debt relief and they're able to build. So it's such an amazing process for me to see people building and moving on from debt. But if you still have debt and you're working through this, that's where budget styles like the 50-30-20 can come in, because then you really understand that, okay, a lot of my money has to go, a good portion of my money has to go towards debt repayment. And then if you can't make that debt repayment, then you're calling someone like a licensed insolvency trustee to say, okay, hey, I'm struggling. It's not ideal, but how can I restructure?
Yeah, and when you look at our Joe Debtor study, the people who come in to see us, they've got, when you look at their budget, and I'm going to, make the numbers a little simpler here, but they've got a couple of $100 available for debt repayment. But when you add up all their minimum payments, it's like over $1,000. There's no way to make the budget balance under that scenario. They need a more formal solution, such as a consumer proposal, which makes budgeting really easy, because if the creditors agree to, $200 a month, $300 a month, well, now I know that's exactly what I have to pay, no more, no less. It goes right into my budget. So that certainly makes the budgeting easier. Now, sorry, go ahead.
No, I was just going to say, if, someone is not in a position to make a proposal, or not, I shouldn't say not in a position, but they can make their debt payments, then they really need to look at their wants, their shoulds, like their expectations, to make sure that they understand that, if I want this debt gone, I'm going to have to really focus on getting the debt gone, or else the interest, look at your credit card statement that says, hey, if you pay this minimum, you're going to be paying it for 122 years. So you want to sit there and ask yourself, really, do I really want to continue this till I'm dead? Or am I going to change my lifestyle in the short term to aggressively pay down the debt? And if I can't do that, then I need to look at a solution, like a proposal, that will help me do that.
So you talked about wants. So I understand what that, you talked about, the must-haves. So I got to pay my rent, I got to buy groceries. But then, so you just said three words there. You said shoulds, you said expectations, wants. So define those. What are you talking about there?
Well, the shoulds are all of those societal and familial and personal guilts that we put on ourselves. Like if you think of should, you feel really guilty. So I always say, turn your should into a could. I could do that. And you're making it a choice. You're empowering yourself. That frees you from the guilt.
So give me an example of that.
We're going to spend money on all the things that make us feel better, and we're going to continue our problem.
So give me an example of what you just described there, a should that's more of a societal pressure than something that's really that important.
Well, I should be able to have a little pool for the kids in the background. We should be able to go out to dinner. Like, why can't we have that? We should be able to go on vacation, right? Because society says, like, why aren't you doing all of these things? You should have all of this stuff.
Gotcha.
Right? That's
you got to be able to afford it. That's
right.
That's the bottom line. Okay, so then you also use the word expectations and wants. Are those kind of in the same category then?
Yeah, for sure. An expectation is, it's very similar. I mean, my mom always told me frustration is expectation meeting reality. So when you're super frustrated in your situation, look at what your expectations are, and then maybe we have to adjust that. What are we expecting? Like, are we feeling entitled, or do we think that this should be happening? So
sounds like your mother was a philosopher or something there.
Yeah.
So, okay, so let's go back to this idea then of, I got to track my spending in order to know where it's going. And it's not just writing down the numbers, it's also kind of categorizing it. So is this a want? Is this a need? Is this a should? And actually being honest with yourself that, well, no, going out to dinner 3 times a week is not a must have. I'm probably capable of figuring out how to prepare food otherwise. What advice do you have for people on tracking spending there? So you've already addressed a couple of things. One is, well, pay for everything with your debit card, and then it's all in the computer. Is that something you recommend, or are there different strategies you give people for tracking their spending?
I definitely give different strategies. I try to make it as tailored as possible to the person in front of me. But generally, it's really good to look at yourself and say, hey, am I better with cash or am I better with debit? Because there are people that are better with cash. They don't like to spend it. They love seeing it, right? Other people, tapping is like an unending supply of money until they realize, oh, it's not unending. Oops, I just spent money that I meant for a bill, which is why we pay bills on our paydays. But that's another thing. So I recommend sometimes, because you do need to have some wants met. Like, you cannot put yourself on such a strict budget that you're going to explode like you would on a diet, right? I'm just going to eat the whole pie because I haven't had a pie in a month, right? Like, you cannot have a budget that doesn't allow for some sort of reward system. And that reward might be something small, and you might have to reframe it so that small is valuable. Meaning, I take my boys out for a drink at Timmy's sometimes. And that is rewarding to me because it's cheap, fits the budget, but I got time with my kids, right? So that became super rewarding for me, and it doesn't break the budget. But sorry, going back to, I got off track. I'm very sorry.
I was just thinking, when your boys are older, are you going to be taking them to a bar for a drink, or will it still be Timmy's? But No,
I'll take them to a bar.
We'll talk about that in a few years' time. So okay, so I get what you're saying on that. There are different ways to do all of this, right? So go ahead.
Right. When you're doing the reward or that, like, take cash out. So for my eating out budget, I take it out in cash, so that I don't go to the restaurant going, oh yeah, I have money. I'm like, no, it's in cash. I can see it, and I show it to my kids, because kids need that visual of seeing. So I'll say, this is what we have left. What are we going to do? And it might be meat pie at Sinbad's down the street, or it might be sit down restaurant, but it depends on the cash. So you need to make sure that you restrict yourself in some way. And that's how I do it with the eating out portion.
Isn't that a lot harder now? I mean, we're recording this in the year 2022, and we've just gone through 2 years of, not using cash because cash gives you the disease. And it's just, I mean, we're buying a lot more stuff online. We all get paid electronically. It's not like the old days where on Friday at the factory, I went to the pay window and they gave me an envelope with dollar bills in it. I mean, we don't use cash anymore for anything. Does that make it a lot harder for someone who is cash based?
No, I still have people. I still legal tender, right? People will still take it, and it is so beneficial for the kids. I do it for them as well. It's a limit for me, and like, you really need to find a way to limit. And I think cash is still just fine.
Yeah, well, and it's certainly it's visual and it's physical. And you're right.
Yeah.
To actually hand over that money, I got to open my wallet. I got to take it out. I got to give it to you. I get the change back, as opposed to just boom, a tap, which takes a second. Are there other budgeting styles we need to talk about other than what we've just talked about? Are there other ways to do this? I mean, of course, my style is don't budget at all, pre-program everything. I know that my hydro bill is $100 a month. I get paid every week, so I just set it up to send $25 every week to the hydro company, and it's simple. Are there other ways to be accomplishing the same thing?
Definitely, I do. I love recommending that everyone pay their bills on paydays. People have so much success with their budget once they start doing that. But that doesn't take into account those different things like clothing. Like, we can put clothing in the budget, but then when you're doing a budget session with someone, I'm like, well, did you buy clothes? No. Do you have the money set aside for clothing as per budgeted? No. Okay, so then what are you going to do when, you need to buy a winter coat, or it's back to school or whatever? You're going to scramble in that moment to try to find the money to buy that. And the whole goal of budgeting is to end that scramble. So I always recommend that they have a checking account and then two separate savings accounts. I have one savings account in that same bank, and I have looked at my annual budget. I know I'm going to spend $2,400 a year on gifts and clothing. So I make sure $200 goes into that savings account every single month, right? It's automated as well.
Yeah,
so I think that's important.
And that's easier to do now because there are banks, online banks in particular, that can give you as many accounts as you want, and you're not paying a service charge for them. So right. That is, and I'm not going to give you the names of those banks because they're not paying to advertise on this show. But if they want to, we can talk. But if you want to have a separate savings account for, Christmas and birthdays, you want a separate one for clothing. I mean, you could have as many as you want. I think that gets a little overkill, but you're right. The key point you're making is every payday, I'm setting aside a certain number of dollars because it's things I'm not going to buy today, but I will need in the future. And that way I'm not scrambling. So you can keep a ledger book or whatever, but a separate bank account is a good way to do it.
Exactly. And the other thing too, for people who are paid bi-weekly, you can't always set the money aside every single month, right? There's 2 months where you have 3 paychecks. So the half of that third paycheck is unaccounted for money. So you can put some money aside every single month, but then you can put the bigger chunk when you get that third paycheck, right? So you want to kind of look at that and make sure you make that adjustment as well.
Yeah, and I know my strategy on that is keep doing the same thing. You hit a 3 paycheck month. That means you're making an extra half payment to the hydro company or the cable company or whatever. And so at the end of the year, they're going to phone you up and say, hey, dude, you've overpaid by a month. Cool. Now, probably they've raised their rates during the year, so I haven't actually overpaid that much. But then in December, great. I don't have to pay hydro. I don't have to pay gas. I don't have to pay my cell phone because I've, in effect, overpaid it throughout the year. That becomes some extra found money that I can use for Christmas. Maybe I keep it till January and it becomes my RSP contribution, whatever. So any way you can trick yourself into saving some money is always a good thing. So okay, so let's wrap up here with whatever final advice you want to give people. I think the big picture is that the exact formula isn't the key. It's having a plan. What final words of wisdom do you want to leave people with today?
Well, I think it's really important to know where your money's going because that gives you a sense of ground. If you don't know where your money's going, you feel a bit groundless, and we don't realize that until we have that budget in place. So I think it's important to do. I think it's important to find the way that works for you. And I think it's also important to tweak as you go. Like, a budget is a reflective of you. And you are a living and breathing thing. So your life is going to change and there's going to be ebb and flow. So the budget isn't meant to be suffocating, but it's not meant to be ignored because then why have it? So I think it's really important to be willing to evolve with the budget. I certainly made mine easier. I was a pen and paper person, super detailed. And then I had kids and a husband, and I just said, I can't do it. And so I'm doing a super simple budget. So I think it's so important to make sure you reevaluate your budget, keep it as simple as possible, but just make sure you're doing something.
Yep, I agree. And I think the term living document kind of encapsulates it, that it'll be different as time goes on. Like you say, you got a spouse, you got kids, you don't have time to spend 4 hours a week, crunching all the numbers. So you bear it down to its essentials. I do agree that you need to know where your money's going. So figure out for you what the simplest way to do it is. And I'll put some links in the show notes to some of the resources we've got on our website that do it. You want to know where your money's going, do what's going to work for you. And then I think you're going to end up doing well. Maureen, thanks very much for being here today.
Thank you.
So there you go. The 50-30-20 budget concept probably doesn't make sense, certainly not in this day and age. But the point is, you do need to know where your money's going. So try a bunch of different strategies. Pick one that works for you and go with it. Again, my strategy is pay things as your paycheck comes in, pre-program as much as you can. If you like to be keeping greater track, fantastic. I mean, at the end of the day, there's money in your bank account or there isn't. That's how you're going to be able to see what levels of success you've got. As I said, I will put some links in the show notes. So if you are watching this on YouTube, please hit the like button, subscribe, leave a comment. Happy to read them in the comments. And if you're listening to the audio version, same thing. We have a new podcast that comes out every Saturday morning. So please subscribe so you don't miss them. That was Maureen Parent coming to you from Canada in the Ottawa region, talking about budgeting. So until next week, thanks for listening. I'm Doug Hoyes. That was Debt Free in 30.